Hello everyone. Okay, so in this video, we're going to briefly talk about the different states of the market before we dive into the advanced stuff. The reason why I wanted to introduce you to these initial videos is, first of all, for anyone who is new to the industry and has decided to join us, must have a clear understanding of these basics that are extremely important for anyone to trade. I mean, if your basics are off, there is no way you're going to be profitable in the industry, no matter what you do. And secondly, for the people who have been in the industry for a while, should also be able to understand the importance of these basics and just to brush up and jog your memories about it. So let's dive into the topic without wasting any further time. There are three states of the financial markets. At any given time, the markets and charts would only be in one of these three states. What are those three states? Let's type them down here. First of all, we have ranges. Secondly, we have channels. And last but not the least, we have trends. These are the three states. At any given time, markets are going to be in one of these three states and nothing else. So I'm going to explain with the drawings, ranges, and channels together to some extent because they have quite a few similarities. Then we'll move to the charts to look to the examples of ranges and channels, and then we'll come to the third one, that is trends. Okay, now to begin with, let's talk about ranges as an isolated terminology. What is a range? The book definition of a range is that a range is a term used to describe when prices trading between a defined high and a low within these two boundaries without breaking out of them. What does that mean on a chart? Let's say you have a support, don't mind my squiggly drawings please, and a resistance. Okay, when the market keeps moving between these two entities of support and resistance and is unable to pick a clear direction, that is what you call a range. So the price comes down, its support goes back up, its resistance unable to break through, comes back down, its support goes back up. It doesn't necessarily have to react exactly from that line or price, as we've discussed previously, that it's not entirely a single line or a single price on a chart. The area of support equals resistance. It's basically an area. So the price can poke above the line you have drawn and come back inside, causing a fake out. What that is, we'll discuss that in the further videos also. But the general idea and the easiest explanation on a range is that when the price keeps moving between a support and a resistance and is unable to break out. Similarly, what does a channel mean? What is a channel? I'll explain it as simple as possible, and I don't think there is a simpler explanation to this. Suppose that you have a range. You take that range and you tilt it. That is what a channel is. Let me clear the confusion here. If you take a range and you tilt it a little to either north or south side, it turns into a channel. Let me draw it for you, and then we'll move to the charts to explain with examples ranges and channels. So the support, that is a straight line up here, you just draw a diagonal line, and we'll see it on the charts also. The resistance, that is a parallel straight line here in a range, you draw that a parallel line but also diagonal, and the price will just keep moving in between these diagonal support and resistance. That is all a channel is, nothing else. It is as simple as that. And before we move to the charts, the common similarity between a range and a channel can be defined as an area where price is unable to break either to the buy side or the sell side. The momentum on both buys and sells is more or less the same. You'd see aggressive buying, you'd see aggressive selling when a price is in a range or a channel, that is deeper pullbacks in channels, aggressive momentum during ranges, and in other words, both the parties, buyers and sellers, are equally interested in the price levels they're getting. Or you could say that both the parties are in agreement to the level of prices being provided to them by the markets. Let's move to the charts and let's talk about the examples on trends and channel. Ranges and channels. Sorry, I'm a little distracted. I'm clearing these brushes. Okay, moving to the charts. Forget what time frame you're on right now. Just focus on what the chart is showing you. So the first example that I'm going to show you is that of a range. Take a look at what the price is doing here. You have a resistance up here. You have a support down here. The price keeps moving in between this area. It doesn't break out. Of course, eventually it does to either of the direction. It cannot always be in one state. I mean, there are 3 states, so the market's going to be in either one of them at any given time, but it can't always remain in one state. Okay, so this, a resistance, a support, price comes down. Okay, rejects from here, comes down, rejects from down here, goes back up, rejects from up there, comes back down, tries to go higher again, pokes up a little bit with the wick that you see up in here. Pokes out a little bit, but gets a massive rejection, goes back down, goes all the way down to possible areas of support, gets a rejection from down there, goes back up, same thing happens here, goes back down, and eventually the prices break to the north side. In this example, it can break into either of the sides, buys or sells. So let's go on a lower time frame to find some better examples that could, look good to your eye, because honestly, as I'm giving you recent examples, I'm trying to find the easiest ones to the eye so that you have a clear understanding of what a range or a channel is. And then, of course, there are, tweaks here and there with it can't be obviously 100% to the T because markets never are. Okay, here is another example of a range. You have a support up here, you have a resistance down here. For a very long time, it's about 1, 2, 3, 4, 5, almost 6 days. The price keeps moving in between this resistance and support. It comes down, goes up, comes down again, goes back up, gets rejection from up there, comes down, tries to go through, cannot, gets rejection, comes all the way down to here, goes back up again. I mean, you can see it keeps continuing like this until the price breaks through in either of the direction. So again, the direction is not going to be a given during a range. It could be either or. It could either be a sell or it could be a buy. That doesn't matter. What you need to focus on right now is what is a range. Okay, so after 2 examples of ranges, let's go to the sister of ranges that I like to call channels. A very clear and a good example of a downward channel is right here. So you take the resistance, you tilt it, and you draw it along where it keeps rejecting. You take the support and you draw it along where it keeps rejecting from down here. So it's a tilted support and resistance in a channel. You can clearly see, again, for a very long time, the price just keeps ranging, if you may, in between these lines. And the momentum on buys and sells is more or less the same here and in the range also that we discussed earlier, right? It's more or less the same. There is not a lot of difference in the momentum. Okay, let's find another quick example of channels. Yeah, and then we'll move to the trends. Okay, here is another example, a very nice example of a very long channel. So you take the support, you draw it along where it keeps rejecting, you take the resistance, you draw it along where it keeps rejecting, and voila, you have a channel. The price spends a very long time. This is an upward channel. The one we discussed earlier was a downward channel. So again, as we discussed earlier, if you take a range, you tilt it to either side, north or south. Obviously, you tilt it to the north side, it's going to be an upward channel. You tilt it to the south side, it's going to be a downward channel. But the similarities between a channel and a range, there are a lot of them. Of course, you can see the momentum here is not as good. I mean, as equal as in the previous example, but the price keeps moving in this channel for a very long time until it breaks through. Okay, so that is pretty much about it for channels and ranges. And now comes the third and the most important part, the most important state of the market. That is a trend. Let's go back to our drawing space. Where did all my text go? Where are you? Oh, there you are. Okay. All right. So now we are going to talk about the most important state of the market, the ones that we love, the one that we want to trade, the one that we want to follow. That is a trend. You might have come across terms like trend is your friend or always follow the trend, right? It is true to a lot of extent when it comes to the markets and trading, but trust me, that is not all you need to be profitable. It's not the holy grail. In all honesty, a trend is very important, but not the only part of trading. There's a lot more to it, and that's what we're going to dive into after this video. Let's go over what a trend is and get over with this video. It's getting a little bit longer than normal. Okay, so a trend is when a market is showing a clear direction over and over again. Let's okay, move into a clear space. Okay, so there are two types of trends, right? Let's talk about the two types of trends. First, we have an uptrend and we have a downtrend. When the price of any specific currency, let's talk about euro for a while. The price of any specific currency is getting stronger and it keeps getting stronger. We refer to it as that currency being in an uptrend. So let's say euro started to pick up strength, puts in a high, comes back down, puts in a higher low, goes back up, a higher high, pulls back for a higher low, goes back up again. So it's going to be a little different than a channel. The moves with the trend are going to be stronger and higher, and the pullbacks are going to be shallower and weaker. That is what an uptrend is. And the downtrend, you just take an uptrend, you invert it. So if we talk about euro as an example, and we say that euro's strength is giving in and weakness is kicking in. So let's say euro, just a news has released, euro has gotten weak against US dollar, for example. You have a shallow and a weak pullback and the price goes lower low, putting in a lower high, comes back up, shallow, weak pullback, goes lower low. So again, an uptrend is when the price keeps making higher highs and higher lows. A downtrend is when the price keeps making lower highs and lower lows. The difference between a trend and a channel is the intensity of pullbacks and the move following afterwards. So if it's in an uptrend, the up moves are going to be stronger and will go farther in comparison to the pullback. And if it's in a downtrend, the down moves are going to be stronger and are going to go farther in comparison to the pullback. So let's give you some examples on the charts quickly, and then let's call it a video. Okay, this is a very clear example of a downtrend. We've talked about this example in one of the previous videos also, in supply and demand. But as of right now, here too, this is a very good example of a downtrend. So the price of euro against US dollar gets weakened, puts in a lower high, shallower pullback in comparison and in strength and weakness. The pullback is very weak, and the move that is following afterwards is stronger. Again, weak pullback in comparison to all of this. You have a lower low, you're looking for a lower high, price comes up in this area, and then the down move is stronger. Weak shallow pullback, stronger down move. So we can clearly see that euro dollar is in a downtrend, whereas when it comes to this, it started to pull back a little faster. That is a phenomenon that we'll talk about in the upcoming videos, but the downtrend still prevails, continues to go lower low. This is an example of a downtrend. Let's take a look at an example of an uptrend. I don't think we'll be able to take a look at an example on euro dollars recently in a downtrend. Let's talk about dollar yen, the monster of an uptrend that's been going on for a very long time now. Been wanting to buy dollar for a long time, but have been unable to get in on any dollars, to be honest. I wonder why. Well, we'll talk. That's another discussion for another day. So the price of US dollar, this is the example of an uptrend. The price of US dollar against Japanese yen gets stronger. A big, strong, sharp move up there, all the way up to there. Very weak, shallow pullbacks, and the move that follows is sharper, stronger, goes farther. Weak, shallow pullbacks, the move that follows is stronger, faster, goes farther. Again, very shallow pullback for a higher low, the move that follows for a higher high is stronger, farther, and faster. And just as in euro dollar, the recent move down was an aggressive pullback, but still the uptrend continues, putting in higher highs and higher lows. Notice what I'm showing you. Let me zoom out a little bit. Notice what I'm showing you is clearly very different from what a channel is, right? So this is pretty much about it for this video. Now that you're down with the basics, I need you guys to do something. I need you to go through all the basics one more time, starting from the first video to this last video, and embed them in your mind and understand that basics are the most important thing for anyone to be able to be successful in the industry. So whatever we're going to talk about in the upcoming videos is going to base upon all of these basics that we've talked about. Support equals resistance, supply and demand, and the states of the markets, ranges, channels, and trends. So as for your homework, go through these videos one more time, brush up your understanding of all the basics that we've discussed so far. And again, if you have any questions, feel free to ask. It's not like someone is going to make you feel lesser than. So we are here to answer your questions and to put an end to your queries. So feel free to ask any kind of questions you have, and I'll see you in the next video where we start digging into the advanced stuff. Cheers.